It's been a crazy month in the stock market, but earlier this week, I told you to watch before Thursday and things were likely to change, and they did. It was the bullish day that I told you guys would likely happen, and Meta would push 660 potentially higher by the end of the week, and Meta broke 687 today in the early morning, and it's consolidating in the 660s right now, spot on exactly where I said it would go. In this video, I'm going to show you guys why today, after data comes out in just about an hour from now, why the market is likely poised to run even more. And I'm going to show you 5 stocks right now that are likely to move upwards over the next couple of days and the next couple of weeks. You don't want to miss this. Strap in, sit tight. I'm going to show you exactly what's going on in the market and why this is actually the divergence that we needed in the market. And there's been a lot of bullish signs. So strap in, sit tight, because I'm going to show you guys 5 stocks that are likely to run in the next couple of days and couple of weeks where there's lots of opportunity. And I'm going to show you guys why it's a divergent time with the VIX and why everything is lined up to be bullish. And the fear and greed meter, we're going to go over that as well. I'm going to break everything down for you. So let's dive right in. I'm going to show you guys exactly what is going on in the market. So right now we're looking at the VIX, and we can see that the VIX is absolutely obliterated now. It's all the way down to $15.79. The VIX is very stable at this time. Anything below 18 is really good, and the VIX is at 15.79. We have data coming out in about an hour from now, and I want you guys to understand that this is a very big trend that continues in the market year in and year out. There is a trend through the VIX, and typically what happens with volatility spikes throughout the year. And I told you earlier this week in a video that was watched before Thursday that the VIX was likely to trek its way down and consolidate. Everything is going exactly the way I said it would this week. And if data meets or beats today, this is going to get even better, closing the week out even higher than it is right now. We can see that after all these spikes, there's a period of cool off, a spike, period of cool off, another spike, more cool off, spike. There's some cool off right here, not very much, big spike, and now it's cooling off. So between now and end of January, maybe February, it should be very smooth sailing as long as nothing comes out of the woodwork and is crazy. But we've seen times of upwards of 6 to 7 or 8 months with very little volatility. So we could potentially see anywhere from January timeframe all the way over to like March and April with some smooth sailing here. It's hard to say exactly, but it's looking like we have ourselves at least this much time, which is February. So there's, based on history, this is what we're looking at, but anything can happen, especially with this administration and everything that's going on. So one of the big reasons why the stock market is very bullish is the import-export has been pretty steady with import-export prices. That's been very stable, pretty much 0 to 0.1 positive or negative. Not a whole lot of change or negativity there yet. So that's a really good thing. When we're also looking at other factors that have put kind of a little bit of confidence in the market is the fixed contract mortgage rate at 6.32%, which is negative 8 basis points versus a week ago, plus 1 basis points versus 4 weeks ago, but negative 37 versus a year ago, which is incredible. That shows stability. Not as good as a month ago, but better than a week ago and way better than a year ago. This shows, like the markets, they go up, down, back up a little bit, and you kind of sit somewhere in the middle as slow progression. That's what's happening with the data right now. The services data, the manufacturing data, non-farm payrolls. We're also looking at other data like the import-export, and of course, the interest rates on the housing market. And the biggest lagging indicators are auto insurance and housing, which we just went over the housing. Auto insurance is another big lagging indicator that is very hard to gauge month over month. It's a very, very tough thing to gauge, but it is getting better and it's holding stable, which is really good. And it's not really confident inspiring like big time investors would expect or big institutions per se, but it's nowhere near where retail thought it would be. Retail thought it was going to be really bad. In fact, it was pretty neutral to slightly bullish. This is the reason why the markets are going up. They incited fear in retail. So much fear into retail that when the data come out, a slight miss or a break even as expected or slightly bullish, retail took that as a buying opportunity because we were fed so much bearish fear on all these stocks and all this nonsense that we thought things were going to get really bad and things just got out of control. And when the data comes out, even when it's a slight miss, we take that as a positive note because it's nowhere near where we expected it to be. It's much, much better, which is why the market is strong right now. And we have a lot of earnings getting ready to pop up and a lot of opportunities to make money. It's how my students are making the profits that you're seeing on the screen right there. We have been printing when the market is down, and we're printing even more when the market is up. And last April, we made a lot of money. So if you want to make the profits that you're seeing on the screen right there, and you want to take control of your portfolio, this is the opportunity to do it. I told you the stock market would recover on Thursday, a decent amount. There'd be some bullish activity. There was. I told you Meta would run to 660. It did. I told you the VIX would taper off and dwindle down very low and consolidate, and it did just that. And I'm telling you guys right now, just like I said, all of these stocks have been recovering. Most of them have been recovering. Navitas is up to $9 plus. Serve is up from $8 to now $13. And we have Meta that's ran from $5.80 all the way to $6.80 today. Over $100 in the last 2 to 3 weeks. I also told you Meta was going to get its options Friday, November 21st. And the very next day, the stock would run, and it did just that. On the 25th of November, Meta started making its run and its valiant effort to recover to where it is now. So I've been telling you guys exactly how this is going to play out, just like I did last April and May. So if you want to take advantage of the move that is about to happen in the market, now is the time to take action. Link to join Discord is below. So before we jump in and I show you guys 5 stocks right now that are likely to run in the next couple of days or weeks, that's really going to help you recover and make some money in the market, let's take a listen to what my student Mike had to say. So we are here with Mike, and Mike has actually been in my Discord since virtually day one. So I'd like to introduce Mike. Mike, tell us a little bit about yourself.
Hi, Corey. My name is Mike. I'm 73 years old, and I joined the Discord to learn strategies to earn passive income. I started out with 25,000 and it's now 84,000. Can't believe it.
That is awesome. That's like a 3x return in 1 year. That's a lot.
I love it. I can't wait to get up in the morning.
Awesome. That is the goal. I'm very, very happy to hear it.
The biggest benefit for me was when we had the 2 coaching calls a week. You can interact with yourself in the coaching calls, and you tell us what's going on with the current events. I just eat that stuff up because I do a lot of reading. Coaching calls bring you up to date and put you in the moment, so you don't feel like you're missing everything. I would tell them that once they go into the training modules and learn all the strategies, and we post trades in the Discord, and if you take the trades and you're hitting it over 80% success rate, how can you go wrong? It's a fun ride. And boot camp's a blast. They'll have fun with the boot camp. You really learn a lot. You're able to really interact one-on-one with you. And well, who says you can't teach an old dog new tricks? The community in the Discord pulls up other members in the community, and you can interact in general chat. And then when you have specific questions, you can go to the Ask Corey section. It's all there for you. You just have to do it. You're happy. Get a bunch of small wins, you get happier and happier. You'll love it.
So you heard my student Mike had to say, if you want this to be your success story, even with a small portfolio, take action right now. The link to get started in Discord is below. You'll be able to book a call with my team and I so I can help you achieve your goals, grow your portfolio, and help you understand what you're doing wrong and take advantage of the move that is about to happen in the market right now and potentially over the next couple of weeks. You do not want to miss this opportunity. It happened earlier this year, and it looks like it's about to happen again. So now is the time to get started. I'll see you soon. So a couple of stocks you guys want to look at to potentially add to your portfolio at this point in time is Microsoft. Microsoft is very important to look at to potentially add your portfolio because of the AI and Azure AI revenue, and of course, overall, the growth in the AI sector as well. Microsoft is very promising to return to the 540 to 560 range. The stock has a buy rating and an upgrade from analysts back in October to $675. It was downgraded to $625, and now there's other analysts that have come out and said $650 to $700 again. So the average consensus on Microsoft is $600 to $675, and the stock is $480. When the stock was $380 last April, there was a lot of hesitance on buying this stock, and I told all my students to buy this stock, and it ran to $530. I have students that printed hundreds of thousands of dollars on this trade, and many of them made tens of thousands of dollars $1,000 in smaller portfolios. I made $30,000 plus on Microsoft. My student Flute also made a lot of money. In fact, I think he made closer to $90,000 on Microsoft on multiple contracts that he had, as well as shares. This is something to really look at. My students are actually in a trade on Microsoft right now, including myself, going out to June of 2026. And I've talked about this in the past. Microsoft is likely by Christmas to push back into the 495 to 500 range. And going into February, March, the stock is likely to start running back up to 520, 540. So you're going to want to have a position in some sort or some capacity on Microsoft. Another stock to look at potentially right now is Oracle. Oracle is doing very well because earnings is coming up and the stock has been beaten up well beyond what has been deserving of Oracle, even with the debt that they carry, which is not of significant importance, although very important. This stock has been beaten up beyond belief. The fair value on Oracle right now is between 220 and 240. We're nowhere near there yet, and most stocks trade with a forward multiple. Now, when we look at Oracle, it's bounced up from a steady 195 to 200, pushing all the way to 217, with earnings coming up in 6 days on December 10th, which is next Wednesday. So this stock is likely to run very hard today and somewhat on Monday or Tuesday. So I'm expecting that Oracle is very likely to get into the 224, 225, maybe 230 range by earnings. It might pull back a little bit, but somewhere in this area between 220 and 230, this is the target before earnings. If they meet or beat expectations, it'll stay in this range or go slightly higher. If it beats a lot, then the stock could likely push into 240, 245 because the market is shifting from fear into neutral as we speak. It was 5 on the extreme greed scale. On the fear and greed scale, it was 5. That's crazy. And now it's pushing 40, 38 to 40 right now. So this is something to think about. We're in neutral territory. So if the stock crushes, it's likely to run. Another stock that a lot of people asked about was Navitas. You see, this is why a lot of you don't really understand how to trade and why I'm trying to help you. Even if you bought Navitas at 12 or 13, even $14, let me break this down for you very, very quickly here. 14 times 1,000 is $14,000. You buy 1,000 shares at 14, the stock dropped down here. Let's say you averaged in another 1,000 at $8 plus 8 times 1,000, okay? And you divide this by 2,000. You have $11 average. If you averaged in down here, even if you bought at the high, if you buy at the low, you have an $11 average, which is right here on this line, not very far up. The stock came up, comes back down, comes back up, comes back down, consolidates. If you added another 1,000 shares down here, 1,000 times, let's say 780 plus 1,000 times 8 plus 1,000 times 14, and you divide this by 3,000, you get an average of 993. 993 would be right here. Look how close to break even you would be. You would not be losing at all. Even if you only dollar cost averaged one time, you'd be right around here. So you'd be somewhere in this area. You'd be around 50 cents to $1.50, and that's not very far out. At worst case, $1 to $1.50 out. That is not far. If you had a dollar cost average down here, this would be the case for you. Now, I'm not saying you should have bought 1,000 shares, or maybe you didn't buy 1,000 shares, but even if you only bought 100 shares, then you could still do the same thing. In fact, if you bought 500 shares at $14 and then you added 1,500 at $8 and you divide this by 2,000, you would get 950. You're at break even right now. If you were buying growth stocks like this, or any stock for that matter, you want a dollar cost average and follow my 3310 rule in my AVP. This is my AVP. You can see it on the screen. But my 3310 rule is what I teach in Discord. It's one of the key factors, a hedge fund strategy, dark pool strategy that I teach my students that is tried, tested, true, and works. And this is why my students are making money and they're successful. And a lot of you guys on YouTube are struggling with this concept because you don't understand it fully. I teach you the Discord. It's something you really need to understand. When you're buying stocks, you add here, you add a little down here, you add a little here. If it runs back up, you add a little bit here. So your average would be somewhere in the $9 range. You don't just buy here and then hold forever, because then you're going to have to wait, and it will work out eventually as long as the stock continues to do what it does and the company keeps growing growing like they are, but you're going to end up having to wait for something like this. And then a good earnings or something. It might take a year, it might take 2 years, and the stock will be back up to 14. But there's no need to do that, because if you buy here and then you buy here and then you buy here and then you buy here, your average is right here. You're not really far away. And if you bought a smaller amount here and a larger amount down here, well, then your average is probably really close to where you're at right now, maybe even lower. You could be in the positive right now. This is very important to understand. Navitas is a strong company. They have cut some of their future guidance, but it's not going to take away from where this stock is likely to go in the long term, the grand scheme of things. And the stock is already up from $7, $6.90 actually, back in November, and it's already pushing into the $10 range. You can see $9.43. We're almost at $10. This stock has almost returned 40%, like 35% in the past 3 weeks. And I told you guys Navitas would be okay. And it is. No stock is just going to endlessly go up. If you don't have the capital to dollar cost average, or you don't have the understanding to dollar cost average, do not buy stocks or shares unless you want to risk your money, because it's not safe. But this is another stock to really look at. And it's still a really incredible buying opportunity, even at $9. But there is risks with every stock. So don't take up more than 10% of your portfolio in any one sector or any one stock. I want to show you the power of dollar cost averaging. I had comments in my YouTube channel saying that Serve Robotics was not a good stock and was not going to go up. And I bought Serve Robotics intentionally to show you guys how to make a trade from a high to a low situation, just like we talked about on Navitas right here. Let me show you exactly what's going on in my portfolio. You can see right here, I bought 200 shares of Serve Robotics at $14.80. I bought 200 more at $13.55, 600 more at $12.88, 1,000 more at $12.60, 700 more at $10.18, and 300 more at $10.17, giving me an average cost on Serve of $12.06 with 3,000 shares. And since the stock is just tipping the scale here at $13, I've made almost $3,000 profit. Earlier today, I was up $3,500. So not a bad way to turn a situation where right now I'd be $1.80 out of the money, which means right now the original purchase, I would be out 200 shares at $1.80. This would be $360 in the red plus the original dollar cost average. So instead of having a $3 or $4 or even $500 loss, right now I have almost a $3,000 gain by dollar cost averaging and waiting a very short duration of time, which is 6 weeks. 6 weeks, I took this position, as you guys can see, into a winning position. It is the same thing I do for all my stocks. This is the power of dollar cost averaging. SoFi is another stock you want to look at, because as data gets better and better and interest rates get cut, SoFi is going to move. It is something that you guys have to understand in the market. When interest rates get cut, things start to fly, big money comes over into the stock market. So even if the stock isn't as good as it should be or isn't performing the way it should, it's still likely to move upwards in sympathy. And this stock is an incredible one. Anthony Noto is a great CEO, and this is a great company. And they've smashed every single earnings. So when we look at this, earnings are coming up in just under 2 months. And with interest rates getting cut, or the interest rate cuts looming on the table and data getting better, this is a stock you do not want to miss out on. Even at $29, I would be selling at the money puts at 29 or in the money puts at 30 and balancing that equation by selling a couple in the $27 range going out a couple of weeks. So if the stock moves, then you may miss it, but you'll get much better premiums on the puts. But if you're selling too far out of the money and you're too bearish, then you will not be able to make as much money. If you guys want to see a video on puts and how to execute them the right way, I'll put that video right there explaining what you're doing wrong with put options. Another stock to look at right now is ARM. ARM is a very strong stock, especially going out throughout 2026. There was tens of millions of dollars going into ARM for 2027 January calls. There's a lot of dark pool data. This stock is likely to crush earnings in February, and that's going to set them up for a nice run through through the spring and summer and their next earnings after that. If it's also good, the stock is just going to keep going. And this is a stock that could very well push $250 by the end of 2026. It's very possible and probable if they beat earnings in February and March and they set themselves up for that good trend into 2026. And there's a lot of dark pool data on this stock. And at its current price, it's almost a no-brainer. Lots of stability. We can see that there's a lot of stability in the 130 range right here, right here, right here, right here, everywhere. Pretty much everywhere down here, a lot of stability. And as long as earnings is good and the data going forward is good and the interest rates get cut, just like every other stock I've talked about in this video, this is another strong stock to look at. Broke structure right here, higher lows and higher highs, and a complete structure break right here. If we don't break the structure up here, then we should see consolidation on this line. So we're still in the 130 range. If we can break structure today and going through next week and pull back and consolidate and make new support here at 142, ARM is setting up for a nice bullish run in 2026. It's looking like that right now. Nebius is another one to look at, and this stock very well could reach new heights of $140 to $160 in 2026 or higher. As you can see, this downtrend, it broke out. We're now in an uptrend, and uptrends are usually slower as they recover from the downtrends depending on the market conditions. But with interest rate cuts and everything else, it's likely to fly even higher. Maybe a little bit of a pullback here and a bounce. I expect as we go through December and January, somewhere in between 120 and 125. Somewhere in this range here is very likely. And as we go through the rest of the year, we could see the stock up here somewhere in the 150 range. So again, all these stocks I'm giving to you right now have a potential of a 30 to 50% return or more, and they're all very strong. Remember, there is a lot of risks in the stock market, so you don't want to go crazy and put more than 10% of your portfolio in any single stock or single sector. You want to make sure you're diversified. So if you guys want to see a diversification video and how to hedge your portfolio with options, and you also want to see a video on hedging with stocks in different positions, I can make those two videos for you. Comment below and let me know what you guys want to see. And like I said, if you guys want to make the profits like you're seeing on the screen right now and be able to live your best life like I am, do the things that you want to do. Maybe it's traveling like my students on boats, airplanes, seeing the world, or maybe you like cars and motorcycles like me. I'm able to buy my dream cars, dream bikes, dream house, do the things I want to do, take care of my family, and live my best life because of the stock market, options, and trading. If you want this opportunity, I would love to help you. Even if you're a beginner and you don't understand what I'm teaching right now, I will help you understand it. And in time, you will be successful. You will grow your portfolio. And I look forward to seeing you very soon. The link to get started with Discord is below. Remember, what you put off today for tomorrow, others put off yesterday for today, and that's not a good thing. You want to take action now. I will help you understand, no matter how much of a beginner you are, I can help you grow your portfolio like the thousands of students I've already done this for over the past couple of years. Look forward to seeing you in the Discord real soon and the next video or upload. Take care of yourselves. One love, fam.